All right, everyone, welcome to the Rental Roundtable, episode number 55. Got on John Pfister. He's the CEO and co-founder of Mazo Capital Solutions. John, welcome to the show.
Kyle, thanks for having me on. Looking forward to it.
As a Georgia resident, I love the Augusta National shirt. I feel like proud that you wore that for me today. So thank you for acknowledging that and repping the state of Georgia.
All for you, all for you. I went last year to the par three competition and the Wednesday practice round, and it's still kind of hands down best sporting experience I've ever been to. So
it's amazing. And actually, I hadn't shown you this, but I got one of the mini gnomes. Check this out. So the people listening, yes, the gnomes are a big deal there. I was not. You have to camp out at like 3 a.m. to get a real gnome. I got a mini gnome, like $20, and I feel proud of that. So it's on my desk here. So there's my Augusta National.
I love it.
There you go, mini gnome. This is my good luck. You rub his belly like Buddha. So, anyways, John, good to have you on. You're obviously good friends with a lot of people I know. Clement, who's been on from Machinery Partner, Alex Kraft from Heave, the Boom and Bucket guys who we integrate with. You obviously, just the fact that you're friends with those guys tells me you're modern, forward thinking about how we can move this equipment rental industry forward with innovation. So excited to talk to you today about equipment finance. So I want to hear about your story, but first of all, for people who don't know, like, what is Mazo Capital Solutions? What do you guys offer today? And then let's work backwards to kind of how you got here today.
Yeah, absolutely. So thanks for having me on. CEO and co-founder of Mazo Capital Solutions, started the business. We had a team of three original founders, and then we brought a group over, some folks that we'd worked with in the past, and officially launched the business April of 2021. We are a dealer focused, let's call it dealer focused equipment finance originator. We have internal funding capabilities. We also have a wide network of banks and independent equipment finance companies that we'll work with to originate and then sell paper to. We've really kind of honed in and a lot of our relationships, and I can get more into it when I tell you my backstory and whatnot, but a lot of the relationships have been in the construction space, kind of vocational transport and then transport space. So we have over the years done business with a lot of rental houses, small, mid-sized rental houses. We've helped with retail financing on some of the larger rental houses, as well as those small and mid-sized rental houses. So it's been interesting for us. We are very much so focused in those industries. We feel that we have a deep understanding of those industries, about some of the pitfalls with equipment financing, what to look for, how to structure programs, how to structure deals. And so definitely feel that we are growing an expertise in the industry, which obviously you serve, and makes this a really exciting opportunity to come on the podcast.
For sure. The vertical focus is so important, right? Because people could do, like for software, you could buy Salesforce off the shelf, and you could buy Salesforce for any product in the world, QuickBooks, but like having a vertical focus where you only work on that market, you can just get the best product for that space. Well, what makes Mazo Capital Solutions different? Like if I'm a 5-location equipment rental company and I need some more financing, like why should I work with Mazo? What's special about you guys?
Yeah, so kind of like segmenting it from an actual rental house utilizing Mazo for their financing for their rental fleet, and then a rental house, if they're selling some of their gear, they have a customer that wants to do an RPO or a customer that wants to purchase a piece of equipment, providing the financing on the retail side, kind of separating those two. If we're talking about rental fleet financing, what Mazo really has specialized in, you have manufacturers out there. So depending on if they're buying new or used, but you have manufacturers that obviously are offering captive subsidized finance programs to the rental houses in an effort to move their gear, right? In an effort to get the gear to the rental houses lot. We have come in, and there are generally, outside of those new equipment purchases, there are generally a host of other purchases that these rental houses need to make. Maybe it's a used piece of equipment that they see that they're getting an absolute bargain on. Maybe it's a smaller generator or smaller piece of equipment that does not have a kind of fully built out captive finance offering. We've been able to jump in and add an additional option to these rental houses, which you also see, and we can get into this a little bit more when we talk about kind of the do's and don'ts of equipment finance. But what you also see is a lot of the times when a rental house gets a large credit line or a large kind of a equipment line of credit, they have blanket liens tying up nearly every asset in their business, right? Their receivables, all personal property, all business property, it's all tied into that singular piece of equipment. Mazo has been able to, on numerous occasions, get rental fleet financing for the specific piece of equipment, a UCC1, just a security interest in that singular piece of equipment, which makes financing with Mazo a hell of a lot easier when you go to purchase additional equipment, because there's not a blanket lien over your entire business, right? There's just a security interest in that singular piece of equipment that's been financed. So we've been a really good option for, for deals that kind of fall out of the normal course of business for rental houses, and have been able to get large, we've gotten $500,000, $750,000 lines available for rental houses as they're, in the ever competitive market of rental, right? And they're trying to fleet up and have the equipment to match the demand. We've been able to step in and help a lot of these guys out. On the retail side, what I think we've done really well is we've blended a technology first approach with some of the human element that I think is lost with a lot of the big lenders in equipment finance, right? There's not an 800 number where you call in and maybe speak to a different person each time. Like, you have a direct point of contact. That person is not only going to be keeping you informed every step of the way in the finance process, but also we treat ourselves as an extension of our partner. Like, we truly value the relationship from the referring party, whether that's the dealer or the rental house that's referring the transaction to us. We don't obfuscate financial terms, manipulate financial terms. We understand that in a lot of cases, the financing partner that's provided by the rental house, they do a lot to actually dictate what the customer's overall experience is with that rental house or that dealer, right? So if 2 years down the road, their accountant's running the numbers on the finance program that was put together by the finance partner referred by the rental house, and the interest rate's not what the customer thought that the interest rate was, like that experience doesn't always necessarily reflect on just the finance company. It reflects upon the rental house that referred the financing. So a long way of saying we take very seriously our responsibility to be an extension of the partner that's sending us the deal. So we feel that we're a trustworthy source where people know that we're gonna bust ass to get the deal done. Like, we're gonna basically try our hardest to make sure that we're getting a competitive finance offer for every customer, small or large. And I think a lot of companies have lost that same relentlessness, right?
Mm.
That I think we've been able to really show ourselves with. So combination of technology and that personal touch, I think, separates us.
Well, you guys are 4 years old and hungry, and when you're newer, you're not new, but you're not old, right? So you're hungry to grow. And I think the other thing about what's special for you guys, if you're a rental company listening to this episode, is you really only work with dealers and rental companies, right? You understand this, right? So you're able to finance purchases that a normal finance lender may not, because they don't get it. They don't understand rental. Like, you guys know it. You're comfortable with it. OEMs will help you buy the new equipment, and you can get a loan from a local bank who may put liens on your whole company, right? Because you understand the nuances of dealerships, equipment rental, you're able to support them in ways that the average finance person will go, I don't get this, right? So you understand the market, but also on the other side, like customer service, right? Reputation, brand. That's what all we have at the end of the day, right? So it sounds like your vertical focus has been super important for you guys. If you had to say, like, your ideal customer profile, ICP, is the phrase that people like to throw around. Like, what would you say your ICP is? Like, who's your bread and butter, down the middle type of customer you like to work with?
Yeah, bread and butter for us is would be considered a large, dealer rental house, right? There's a lot of combinations or hybrids of the two, but folks that are not only looking for financing for their own dealership to put into their rental fleet, but also are selling retail, right? We really pride ourselves on trying to provide the absolute most competitive program, again, with the UCC1 against the equipment, good payoff policies, so that if a dealer wants to actually sell that piece of equipment, they're not tied up into the financing for 5 years, right? They're able to sell the piece of equipment with a really favorable payoff policy, and then to provide the financing for that customer on the other end of that becomes a super important kind of a life cycle of the customer, right? Or lifetime value of the customer. It becomes super important for us to access financing opportunities on that equipment being sold, in addition to the rental fleet financing. So I'd say your small to mid-size rental house that has some folks that are focused on used equipment sales they're trying to kind of turn their fleet over each year. And so they have a certain allotment of gear that they want to sell on a yearly basis. We do really well in kind of strategizing and putting together programs that not only help them get more equipment when they need, but also help them sell that equipment to the customers that they're servicing.
Yeah, small, medium-sized rental companies. I don't know many things in this world, but I know about those guys, right? We talked to those guys a lot.
Right.
You can't see with my headphones on, but my ears perked up when you said technology. But it's something I like to talk about. Like, you don't really hear finance people talking about technology. Like, what do you guys have that makes you different on the technology side? How has that been important to your business success?
Yeah. So for us, some of it's behind the scenes, right? Some of it's like what we do internally to make sure that we have an efficient process to make sure that a transaction, once it enters our credit department, is easily and quickly decisioned. And then the generation of those documents is all streamlined. So we can generally move transactions through much quicker than the local bank, right? We can move transactions through utilizing a lot of it's kind of a cobbled together assortment of tools that we all know out there, but DocGen and DocuSign, but the ability to pull information directly from our Salesforce to automatically populate contracts reduces the amount of time it takes to put contracts together by 30-40 minutes, right? So doing that across 180 250 transactions certainly leads to kind of scale and a streamlined process for us that makes it easy to do any type of deal. On the technology side, on the front end, what we've created a dealer portal and a decisioning system, and it's still being developed, and we're kind of continuing to iterate on it. As you know, well, with technology, you kind of continue to think of new ideas or new ways that you can service the partner. But we've created a dealer portal. It's called Paid, powered by Mazo. So this is an online dealer portal. We can set you up with payments as low as widget that applies directly to your inventory listings. It breaks a $60,000 listed piece of equipment down into monthly payments as low as $1,600. By clicking on that link, and kind of the customer generally from a psychological perspective can a lot of the times bite off on $1,600 a month a little easier than they can $60,000. So clicking into that link, it brings you to a kind of a high-tech, sleek application flow. The dealer on the back end is notified every step of the way. So they have their own portal to log in. They can see all current applications that have not been completed, all current applications that have been completed, approved, contracts in, funded. They can track their funding volume. They also have the ability to go in, if they're on the phone with a customer, they can text an application link, they can email an application link. It connects directly to their website. So we've created this, again, not within the equipment finance space, not groundbreaking stuff. This is all stuff that we started developing on day one of Mazo, right? Understanding that we needed to, at the first step of what we needed to do at Mazo in order to reach the scale that we wanted to, is we needed to match the level of technology that the bigger, larger, more established equipment finance companies had. We needed to match that technological capacity on day one, right? And then we can continue to iterate. We can introduce as part of Paid, and once an application's processed through, all scores are run in the background. We can then start to layer in some predictive decisioning around that transaction. So we can start issuing pre-approvals instantaneously on the spot. You are likely approved for $80,000, monthly payment range, $1,200 to $1,800, term range, 60 to 84 months, right? So we can create this predictive decisioning model utilizing obviously AI and LLM and really like looking at past decisions, feeding that information into Paid and making sure that we're providing a really, really streamlined kind of point of sale like experience for a customer.
Well, it warms my heart that you guys are thinking about this from day one. When people think about technology, it's always like, what are you doing for the customer, which is important. But the other thing you mentioned was the internal efficiency, right? Because if you keep your cost structure low, you could be nimble, you can pass cost savings on to your customer, of course, right? That's the other part of using technology. It's not just for your end user, but how do you become more efficient yourself to keep your cost structure in line, to pass those savings along? And the other thing you mentioned on the product, it's never done. I have two red flags with technology people. One is when they say the product is done. And secondly, is when the technology guys, when they're wearing a suit. I'm like, why are you wearing a suit? I want you wearing like a sweatshirt and like shorts and flip flops.
Wearing a suit is never going to be the answer.
No, it's like a little, if they came up with a suit, and if I was wearing a suit right now, I said our software is done, you'd be like, I don't know about this guy.
Yeah, no, I wouldn't trust you. Probably ain't.
That's right. Well, we started off, wanted to get into your story and background. So thank you for the context for our listeners on what Mazo Capital Solutions is and who you serve and how you're different. Um, I love talking to founders of technology companies, rental companies, like what drives people to take on this risk of building something against all odds. What is your background and story? How did you get to the genesis of starting Mazo? What was that first year like? Tell me about the journey to get here today.
Yeah, so I started in the equipment finance industry nearly 10 years ago. I took a job with the predecessor of Currency Capital. So Currency Capital went through a number of iterations. When I originally joined, Currency Capital was partnered with Iron Planet. Okay,
Yep.
so my initial foray into equipment finance was all Iron Planet referrals, all customers that had clicked to apply for financing on a piece of equipment that they were either bidding for on Iron Planet or that they had won and were now looking for a way to pay for the equipment. So we, in most cases, if we get them pre-approved, great. And like the best overall situation for all parties involved was for a customer to go get pre-approved for the auction, to know that they had $100,000 to spend. They bid 90. We have the approval in place. We can lock up the financing in a day, right? A day or two. What happened pretty consistently, though, is a customer would win an auction on Iron Planet. They'd receive their invoice. They'd say, how am I going to pay for this? Right. I don't want to just stroke a check for this. Let me apply for financing now. And Iron Planet had a pretty strict 72-hour turnaround time
Mm.
on receiving payment. Right. And I think there were definitely consequences to the bidder if payment wasn't received in a timely manner, probably some exceptions for that. But by and large, we had kind of a 72-hour window.
Yeah.
Once the application came in, if the customer had won a bid. So I jumped right into equipment finance, working on transactions that I needed to have done in 3 days. These are not always transactions. It's not like the contractors necessarily bidding on Iron Planet were always extremely cooperative, providing the type of documentation needed to get the financing fulfilled. But it introduced, like, really early on, time kills all deals, the speed of the transaction, making sure that I'm driving the cadence of the transaction. And there's a way to drive the cadence of the transaction without pissing off the customer, right? Or feeling like you're being too pushy. Now, that balance can be a little difficult to strike at times, right? Because you have to move it forward, and you also have to push on them, but you can't to the point where they just lose interest and they decide to default on that winning bid, or they just decide to go in a different direction. So started working on Iron Planet transactions. Eventually, Iron Planet obviously acquired by Ritchie Brothers. Currency transitioned and began working with Sandhills Global. So Machinery Trader, Truck Paper, Tractor House, all of the different online publications. Probably don't need to explain it with your audience. Great organization out of Lincoln, Nebraska. Learned a lot from those guys and was part of the original team that was trying to put together vendor programs for Sandhills, folks that advertise with Sandhills and have their website hosted with Sandhills. So was part of that original team, and again, learned a lot, met thousands of dealers in the construction and transportation space. So it's where I mentioned, like, we've kind of kept that same niche and that same vertical. And eventually some things occurred, and Currency was on the cutting edge of a lot of ideas. Currency had a tech forward approach and did a lot of things right, I think, in that regard. Eventually changes happen. The private equity firm that owned Currency at the time made some decisions that I felt were not didn't really align with me and what I had been doing with my partners over the years. And so I left briefly and worked for another group in the equipment finance space. This was right when COVID hit. Worked for them for 11 months. And it's a really long story, so I won't get into it fully, but I had the opportunity to put Mazo together with this group. And so I ended up leaving the other group that I was with, Amore Equipment Finance. I ended up leaving there after 11, 12 months. Another great organization that if this opportunity hadn't presented itself, I might not have left. But I had an itch, and I felt that with the relationships that I had built, with the network of lenders that we had available, that we would be able to fill a need and provide financing for that customer that's A through D, right? When a dealer or a rental house needed to get financing for their customer, I knew that we could provide a solution for them and we could solve a real problem, right? There's 25 different finance lenders that they could go with, right? But there's not every single one of them are people that you can trust are going to really work as hard as you are to get that piece of equipment sold. And I think we were really early on able to prove ourselves as, again, as an extension of the dealer, as an extension of that sales force. And we push to get deals done just as hard as they do.
Uh, what what was that first year like? Now that you've made the leap and you've got the background, what I love about your story is you understand the space, you've done the job. You're not some random guy who just like, I think I'm going to do this, right? You have a finance background, you have an equipment finance background for 10 years. You see the opportunity, okay, all those things make sense. At some point, you're going to leave your job and go be the founder of a company, and you go, oh, are we really doing this? Like, what was that first 6 months, 12 months like as you kind of jumped into it?
Yeah, it's funny. The day I was married at the time, the day I quit my job, my wife tells me she's pregnant. Literally like 2 hours after I quit, I lost health insurance. My wife tells me that she's pregnant with our first daughter.
Yeah.
When you're approaching, right, I think it's important when you're taking the risk and you're kind of going on the entrepreneur journey, like burn the boats. There's no fallback, right? It has to work. And I think that situation that I helped create, obviously, but that situation where she tells me she's pregnant right after I quit my job, it completely changed. It, like, with a snap of a finger, it changed the entire way that I was going to approach those next 9 months. Really, like, I kind of looked at it like, I have 9 months to really like build this thing and get the team cohesive and get them ready to charge. And so for those next 9 months, obviously there was a brief little hiatus when I was there for the delivery of the kid, but it was trying a whole bunch of new things. It was reaching out to dealers that we knew in the past, or reaching out to new dealers and new referral sources, and introducing ourselves as folks that, yes, we're new as an organization, but we know the industry, we know the game, we know how to service your customers, we know how to service your dealership. Um, and so one of the biggest kind of takeaways from those first few years is like building a reputation, right? And I think you kind of touched on this a little bit, but we approached it, and Warren Buffett has said this, like, building a reputation takes 20 years and it takes 5 minutes to destroy it. Like, we have to match everything that we say that we're going to do. We need to match with our actions, right? And so from the beginning, the original founding team, and there were 6 of us that kind of started at day one, like, we all approach business the exact same way. There was such an alignment of values, right? That there's a right way and a wrong way to do business, and you do what you say you're going to do. And if you continue to do what you say you're going to do, right, you might not have the very best product day one for every single customer that comes across your door, right? But you have to listen, you have to evaluate, and over time, right, as you expand your funding capacity, as you grow your expertise with additional members of the team, over time you can become, right, a much more formidable partner. But in the beginning, like, you have to demonstrate that you have the relentlessness and the hustle that they want as part of their team, that they want as a partner. So I would say early on, be relentless, right? Early on, hustle. You have to wear a bunch of different hats. Now, those problems reared their ugly head, and we'll talk about that later, probably at some point. But early on, just get after it.
Yeah. Well, that's what I have. Part of why I love working in this industry is you talk to the owners, and they either started themselves, or father started, their grandfather started. Sometimes they buy the company. We had a recent guest on, I think last episode. He worked as first job out of high school, sweeping the floors. Been there 25 years. He's now general manager, buying into the company. He's becoming an owner himself. Worked his way up from the bottom. And but I guess what I'm getting at is the equipment rental industry, the operators and owners, they understand hard work probably a lot better than me and you do, sitting here in our office talking on a podcast, right? Like, they get after it. And I think that's why when you show up, when you travel to see them, you go to the conferences, you do what you say you're going to do. You're on time, you're fair, you're transparent. That really matters in this industry. It matters in everything, but particularly in the rental industry. And I love that Warren Buffett quote. It takes 20 years to build a reputation, 5 minutes to ruin it. If you've read the book Snowball, he talks a lot about in the 90s, there was a deal that was falling through. The company was going bankrupt, and he was attached to it. And it stressed him out more than anything in his life was he was attached to something that was potentially cracking his reputation. And he did the right thing. He stood by it. But when you see a guy like that, when he talks about his biggest mistakes or stressors, it wasn't all the billions of dollars he's made and lost. It was the reputation piece. So you kind of get through this first few years, right? You're, you're building the reputation, you're hustling, and maybe here we are now, 4 years in. What's the future? What's the next 4 years look like for Mazo?
Yeah, we're ultra focused right now on we want we want to expand our funding capability. We want to be able to get creative. There are
Mm,
structures, there are opportunities to help, right? We're looking at a massive transition potentially. Obviously, tariffs have impacted new equipment sales.
right.
Used equipment sales is likely going to be a big driver over the next 6 to 9 months, but we also have
Mm,
this massive shift to rental. So
mm,
how can we as an organization create a product that's more likely to be used or more favorable for the rental companies? And then how do we, again, like how do we continue to develop new and creative ways to structure when they want to get rid of that asset, right? Rental purchase options and the ability to create a true rental purchase option for a rental company is absolutely front of mind for us. Part of what we need to do as an organization is we need to continue telling our story within the capital markets and the debt markets, and we need to get people to understand why we are a responsible steward of this capital and why we should be equipped with larger and larger line capacity to go out and execute on this vision that we see. So everything that we're focused on right now is to make sure that we hone in on the things that we're doing really well right now and we do that better, but also that we expand and get creative with finance structures, with track leases, with
yeah.
operating leases, with RPOs, these products that they 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 take a little bit more than just an application, a credit report, right? Like it's a little more, it requires a little more partnership with the dealer or the rental house that you're working with. Um, and so for us, it's how do we innovate, right? How do we create new structures, or how do we really dive into structures that aren't necessarily like, not everyone is doing them right now, but when we actually listen to the folks that we're working with, they're going to tell us what we need to do. We just need to execute on
Mm. Sounds like you guys are being pulled further into the market. You're seeing opportunities, you're seeing hunger from the dealers, the rental companies, and you guys, like I said, because you're vertical focused, you can take those risks, you can bet on these things because you guys understand it, right? But part talking about Warren Buffett,
it.
like he says, the average person should buy an index fund, right? Because they don't know what they're doing. But if you really understand something, right, you should double down, double down, double down. You guys understand that you guys are being pulled into the market. I had another question on tariffs, although who knows, right? We're here in May 2025. This episode will come out June 2025.
Yeah.
So even by then, things will change. But like if you're a rental company, are these tariffs that, let's say they stick and they go out? Is that good for rental companies? Is that bad for rental companies? It's going to impact a lot of things. Do you have a perspective on that?
Yeah, I think in general, and I might be right today. Well, the
Yeah.
funny thing about right now is half the people will think that I'm right, half the people will think that I'm wrong, and in a month it'll flip flop, right? And
Yeah.
like people that thought that I was right will now think that I'm wrong. I think in general we are seeing a pretty sizable shift to rental. It is a
Yeah.
way for contractors to, in a period of uncertainty, they're not forced to make the same commitment that they are with a new or even a used equipment purchase, right? So it gives them more flexibility.
Yeah.
What it does, and I think that over time we see kind of ebbs and flows of this, is the contractors are generally, and I touched on this a little bit with Alex from Eve, but you know, contractors, there still remains, this is the age old question, right? Like, are they interested in the ownership of equipment because of the their net worth and their balance sheet? Or are they interested just in the use of the equipment, right? And we're seeing some transitions with a younger generation of contractors that are using equipment as a service and that are using these flexible rental payment plans, because it's not about ownership of the equipment, it's about utilization of the equipment, it's about
Right.
using the equipment to complete a job.
Hmm.
We'll see probably ebbs and flows of this where purchasing and ownership is more important. Right now, it seems as if rental houses have considerable amount of runway. Demand is high in the rental market from what we've been seeing. They're not able to get gear fast enough, right? This is why we see a lot of opportunities, is because they might be tapped out with 5 or 6 banks on financing. We now need to get in there, and we need to take a look and make sure that we understand how to underwrite this transaction appropriately. Yes, they've taken on a massive amount of debt over the last 24 years, as most rental houses have, but they're at 96% utilization, right? Like
Yeah.
all of their gear is out on rent, some of it on long-term rent. They're guaranteed payments on this for the next 12 to 18 months. So we need to take a common sense approach to underwriting rental houses.
Mhm.
I think that there's runway. I think there's runway for rental houses to be extremely successful and a prosperous time over the next 12 months, while there is this uncertainty lingering over the economy, while we still have elevated interest rates. The Fed chose yesterday to hold pat and not decrease interest rates, which I think a lot of people were expecting. And again, this is coming out in June, so this will all be old news, but it's the 8th of May here. Purchasing equipment is not as feasible as it was. Rental
Yep.
is going to remain hot. We'll see how that changes. That could change in June with a
Yeah.
rate decrease, tariff announcements, like everything could change.
Yeah.
So
Well, there's two things I want to say. One, on we've talked about this before on our podcast, but just the penetration of rental increasing 1% or so every year. It's about what 60% in the U.S. In Europe and parts of Asia, it's 85%. And I think later numbers I saw, the U.S. equipment rental market was about 60 billion in 2021. They're saying this year maybe 80 billion, 83 billion, right? So the economy's growing, and within that, rental penetration is increasing over time. So
right.
that's naturally happening. That's like outside of tariffs. That's just happening, right? I think partly is the younger generations more comfortable with recurring revenue and just renting things, Airbnb and Uber, and even software. You don't buy software anymore; you subscribe. Right? Everything is subscription. That's rental. So you have that trend, and then that's the long term macro thing. I have a high confidence in. That's why we're probably both very excited about being in this market, because there's a lot of tailwinds behind it, right? The second part though is with the tariffs, right? I don't know, period. However, what you're saying makes sense to me, right? If interest rates are high and buying new equipment is going to be very, very expensive, potentially with tariffs, that creates a market for builders who say, I'm not going to go make a $300,000 like purchases this year, right? I'm going to go rent, right? And ultimately, that's good for rental companies. So I think again, who knows on the tariffs? Because I could tell someone would argue the other part of this here, but there could be actually two tailwinds happening for the rental industry. One is the natural growth of the market, and two, the tariffs in a weird way could actually be positive for rental companies. Again,
Yeah,
we'll see.
I think so. I think so. And I think there's no, we don't know also, like the Fed and their decision to keep rates kind of steady, states that we're likely to see higher unemployment and higher inflation, right? So there are certainly some concerns with the economy at large, right?
Yes.
And there are definitely contractors that we've spoken with, or partners of ours have spoken with, who have just lost 2-3 contracts, right? Or they've lost federally funded contracts that generally they're renting more specialized equipment to fulfill those projects. So I don't think that we have tailwinds for the rental industry overall. I think we are still in a 6 to 9 month period where there's tremendous uncertainty, right?
Yeah.
Where no one knows exactly where things are going to go. We might have an increase in the adoption of rental, while at the same time a decrease in the overall demand for equipment, right? Because these jobs are being canceled. So those two things could counteract each other. I don't think that there's any question that the rental companies, and if you see it from my perspective, but when you look at the amount of equipment that these rental companies have been acquiring, right, in an effort to fleet up, they certainly are buying as if they can't, they basically they can't stock enough equipment right now, right? It's always being utilized. And the re-rental companies are also stocking equipment, because every time they get a new piece of equipment, they can get it out to United, they can get it out to Sunbelt, they can get it out to another one. So we're seeing a massive increase in the re-rental market as well.
So you're hearing that rental companies they don't have enough equipment right now. They don't have as much as they want. That's sort of actually funny. That's where we were like 5 years ago, coming out of COVID, right? And then everyone had 18 months waits. They bought all this equipment. And then we're oversupplied a year ago, and now it's starting to change. I think so. There's multiple trends, right? There's just the long-term 10+ year trend towards rental. There's tariffs happening right now, on and off. There's also uncertainty, right? Potential recession, et cetera. One industry group we talked to surveyed a lot of their members, and they said that 55% is what I heard. So this is hearsay, and it said 55% of the members they talked to are down year over year on revenue. So that may just be a global thing, right? McDonald's had earnings, everyone's sort of down right now. So there is like some uncertainty as we kind of navigate what this year looks like. So I don't know.
Yeah.
We'll listen to this in June and see how accurate we are.
Yeah. I mean, and geographic region is much different, right? Like the rental market in Texas is much different than the rental market in California. So we see, and we're national, right? So we hear from partners all over the place, and one person could be like, 25% increase year over year. The other folks that we speak with could be down 25%. So
yeah. Data company, right? We can anonymize aggregate data. We could see the trends. Texas is booming. It's what it seems like. I want to talk about, just as an equipment company, some, financing 101 things to look out for, red flags, top 3 red flags, hidden terms. Equipment folks, do you have sort of a couple personas? One are the finance people. They love finance and numbers. They understand the business and the models. And some people just love equipment, right? And they may not be as strong in the financing terms of what to look out for. What are some of the basic things equipment companies need to think about when they're getting financing for their equipment?
Yeah, the first thing we touched on earlier, right? I do think it's an important question to ask, like what type of security interest is being taken for this equipment purchase, right? Is there going to be a blanket lien, or is there a UCC1? Is it just a security interest in the piece of equipment being financed? Again, having financed rental houses in the past and having been required to get 10 subordination letters on blanket liens, everything becomes more difficult when every bank is just taking out a blanket lien on your business, right? There are layers and layers of first right to debt collection, second, third, fourth, fifth. So make sure you understand exactly what the security interest looks like, right? Secondly, and I think this goes probably for more of the small and mid-size rental houses, but maybe more so small, but there are a lot of players in the equipment finance industry. There are a lot of folks that tell you all the wonderful things that they can do for you. They're selling to a rental house, and offering a lease in which the rental house is locked into the financing, right? Leases, generally, there's no prepayment available, right? And there could even be a balloon, or there could be a residual payout, an FMV residual tacked onto the end of it. So make sure that you understand fully, if you're seeing a monthly payment that's too good to be true, you need to dig into a couple things. You need to dig into whether or not there's interim rent being charged, and is that interim rent being charged on a monthly basis or on a quarterly basis, right? When does the actual loan commence? Interim rent is a charge, right? It does not take away from principal balance. It's a charge for you to have possession and use of the equipment before the commencement date of your loan, right? So you need to figure out if there's interim rent being charged. Is it on a monthly or on a quarterly basis? You need to make sure, like, I don't think that anyone should ever, especially in the equipment finance space, where in a lot of states, California and New York are separate, right? Because they have commercial finance disclosures. But by and large, most states do not have commercial financing disclosures on their loan documents. So there is no clearly stated APR, no clearly stated interest rate, no clearly stated prepayment penalty or prepayment policy, no clearly stated total cost of the financing. So if you're in California, or if you're in New York and you're doing a finance lease, or you're doing an equipment finance agreement, you're going to clearly see what your interest rate is, right? And it has to be calculated according to state regulations. Every other state, you could tell someone in Colorado that their loan is a 9% rate, and it could be an 18% rate, right? And a lot of salespeople and a lot of people in the equipment finance industry will use simple interest rates or lease rate factors, a number of ways of basically obfuscating or manipulating the finance terms, right? Coming up with unique and kind of creative ways to sell to a rental house that the financing is lower than it actually is. So we get a lot of examples on a damn near daily basis when we're asked to provide a quote, right, against another quote that's been received by a rental house, and we see the quote and the interest rate that's being emailed over to them in this quote is lower than our interest rate, but our monthly payment is lower. Same terms, everything else held constant, right? Clearly doesn't.
Is it just like all these like random fees and little things that they put?
It's random fees. Just if you hear someone say the word simple interest, run, get a loan calculator and figure out what the exact interest.
That's when your software guy shows up in a suit It's the same analogy. Just run, right?
It's when your equipment finance guy shows up and he's wearing a suit with a money print on it, right?
Yeah.
Driving shoes and showing up in a Maserati.
So effectively, they're just lying, right? But like,
there are dishonest folks in every industry, right?
right,
Like
right.
there are dishonest folks in every industry, but there are folks that intentionally mislead small businesses in America as to the exact terms of their financing.
But in certain states like California, they're prevented from doing that. Is that right?
California and New York, there's a commercial finance disclosure which
Yeah.
clearly states the interest rate and the APR of the transaction.
Yeah.
Right. Additionally, I think it's really important. Like a lot of people, and I've seen this over the years, and you've talked to customers or end users of equipment who are in a terrible position. They're trying to trade a piece of equipment into a dealership, or they're trying to sell a piece of equipment as a private party to another contractor. They asked about the prepayment policy. They asked what the prepayment looked like at the beginning of the loan. And a salesperson for an equipment finance company says, yeah, no problem. You can pay it off whenever you want. There's no penalty, right? Now, there might not be a penalty, but if you sign a 60-month non-cancelable finance agreement, there's not a penalty, but you're locked into 60 months, regardless of if you paid it off in 2 months or in 18 months. You have 60 payments times your payment amount. That's the amount you owe, right? So you can pay it off at any point without penalty. We're not penalizing you. We're just locking you into the terms that you sign in your contract, which is 60 months at that payment. That's your total payoff amount.
So you end up just paying double, triple, quadruple what you signed up for.
You might think that you have the opportunity, like you do with a mortgage, you might think you have the opportunity to pay off principal only after 6 months, right? You get a massive windfall or a large contract comes through and you're able to pay that equipment off, or a dealer wants to buy it from you in a trade-in for a larger or an upgraded piece of equipment. If you're not sure of what your payoff policy is, you're likely going to be put into a situation. If you're not working with folks that you trust, you're going to be put into a situation where the payoff is 5 times more than what you expected.
Yeah. So a lot of these red flags are just preventing yourself from being misled with monthly payments that are too good to be true, and security interest, and the statement terms that aren't clearly stated. Like, okay, I hear all those things. How do I learn about these things? How do I know when it's right versus not right? And maybe that's what Mazzo's here to solve. But like, if I'm an equipment guy, I love deal with equipment. I love selling, love talking to customers. I don't like reading term sheets of financial stuff. So how do I like get back to what I like to do and avoid making big mistakes here?
Yeah, I mean, I think firstly, it's important to ask the questions, right? And a lot of the folks, like if someone's not willing to communicate with you via email, or they're using terminology, they're not directly answering your question, right? If they're not willing to communicate with you via email and they're only willing to do it over the phone, it's likely because they have something to hide, or they don't want that necessarily to be discoverable in the future, right? We work with a lot of folks. We are not there. We're not like the single best option on every single transaction that a dealer or a rental house is doing, or even an end user, right? I think by and large, when you look at the overall body of work, that will provide service that's better than most of our competitors. But we have folks that send us their contracts, or folks that send us the terms, and they're like, hey, I have this deal that's available through this dealer for this piece of equipment. I think that there's some sort of relationship between the manufacturer and the lender. Can you just review these terms for us quickly? And like, I've reviewed probably 150 finance deals that I ended up telling them, this is a great deal, take it. Right? Like, you got a good deal. 75 basis points.
Well, that part,
I don't see anything that sticks out. That's the way that we've approached this business from the beginning, is like, we're not in it for every single deal. We're not in it for a single transaction. We're in it for a long-term relationship. Right. And so I would love for folks to be willing to consult with me. Like, hey, I have this opportunity. I have this offer from a finance company. Is this legit? Does it look good? And you're not going to see this from like the big banks, right? Like the big banks that have a tighter credit window, they're not doing any of this, right? They're very nervous about the reputational harm that might come to their bank if they were misleading customers. But there's 1,000 other equipment finance companies that are probably calling every listener on this podcast. There's 1,000 finance companies that are probably calling them weekly. be careful who you work with.
Right. And I think, with where AI is today, I mean, upload the documents to ChatGPT, be the paid version, and see what it says.
Right.
What are the red flags? And ask it. And does this match the email chain I have with them? And it'll tell you. I mean, it's not perfect, but it's another set of eyes, right? And maybe you'd be happy to look at it. And part of
Absolutely.
what you're building, like long-term company, right? No shortcuts, 10 years of all-nighters to be an overnight success sort of thing, right? So you're not after every single deal. You're after, trying to win the war, not the battle, sort of thing, right? So part of how you've been building with reputation and doing the right thing ultimately, right? That pays off.
100%.
Well, John, it's been awesome having you on here. We're just out of time. I love talking to you. You're innovative, pushing the industry forward on the equipment finance side. Last question I like to ask folks: what's the best business advice you've ever gotten, or maybe some good advice that you've gotten that's helped shape what you're building here at Mazo Capital Solutions? And I'll pause with like everybody I ask this thing, I'll go, oh shit.
Yeah, no, well, there's one thing that's been told to me. I don't know if this is like the perfect answer, but early on I was told, because we have a general counsel, great guy, right? But we have a general counsel that likes to identify risk. And I was told early on that a general counsel's job is to identify risk. It's your job as a leader of the business or a founder of the business to take risk, right? So like, let them do their job, let them identify the risks, and then weigh it against what you believe the reward is and take the risk, right? So I don't know that that's like the best. That's how I want to.
No, I love that.
Like my best piece of business advice. But look, if you're in a leadership position and we think about this on the equipment finance side, it's kind of the same, same theme here. But like, if I have a portfolio of transactions that I've originated and I don't have a single default, right, or I don't have a single delinquency, I'm not buying deep enough, right? Like if I have a perfect portfolio, now this can get out of hand pretty quickly, but if I have a perfect portfolio, it means that I am not taking enough risk. And I think that as part of being a leader in a business, as part of founding a company, you've got to be willing to take risks. You got to be willing to stand behind those. You have to clearly articulate to your team why you took those risks and make sure that they don't think that, you're just kind of dictating at will and not really thinking things through. Like, I think it's our job as leaders to convey why we've taken risks and to get everyone kind of rowing behind you.
Yeah. And the last thing I'll say is sometimes the biggest risk is not taking any risk at all, right?
100%.
Well, John, it's been awesome having you on. Love the master shirt. It's been fun talking to you, and thank you for everything you do for this industry.
All right, Kyle, thank you so much. Talk to you soon.